Ford Motor Companies, an automobile hegemon that is best known for their Ford F-Series, which has been renowned as the best-selling car in the US for 41 consecutive years. However, with the explosion in the popularity of electric vehicles added with the new Inflationary Act of 2022, Ford may be in an era of unprecedented opportunity. Strong brand loyalty is the first thing that puts Ford ahead of their competition. The century-old brand has remained relevant in the fiercely competitive car industry even as electric vehicles are rapidly increasing their market share in the US. Ford, however, seems to have been heavily investing in the ballooning EV market. Since its release in May of 2022, Ford's F-130 Lightning has been the best-selling electric truck in America. The truck was named the 2023 Motor Trend Truck of the Year. In addition, Ford's E-Transit vans are the best-selling electric vans in America, accounting for 73% of the total market. In 2022, Mustang Mach-E sales increased by 45% to 39,458 vehicles. This strongly indicates that Ford will have a substantial market share in the electric category as it ramps up EV manufacturing, driven by its insane customer loyalty and established branding. Ford reportedly sold the second most electric vehicles in the United States last year. While it sounds fantastic, it's important to note that this accounts for less than 8% of US EV sales, compared to Tesla's staggering 65% market share. As a result of the slowing global economy, Ford stock has been down 28% year to date. However, with the Inflation Reduction Act of 2022, it's expected to provide major advantages to Ford. Firstly, the act includes a $45 per kilowatt-hour tax credit for battery generation, which means that Ford will be able to subtract $45 from own income taxes for each kilowatt-hour of battery energy that they produce. Ford believes that under this provision, the firm and its battery partners may get more than $7 billion tax credits from 2023 through 2026. And when its joint venture battery installations scale up in production, the yearly credits will only grow. On top of that, the Inflation Reduction Act also dictates a $7,500 business EV tax credit per car. And according to the company's first estimates, 55% to 65% of its commercial vehicle customers will be eligible for this credit, and Ford will undoubtedly profit as a top commercial vehicle manufacturer. In addition, the business also anticipates that the parts of its Mustang Mach-E and F-150 Lightning models will fulfill the Act's critical materials criterion, making them eligible for an additional $3,750 per vehicle credit. If passed, the EV that Ford manufactures and sells will deduct at least $11,250 off their yearly income taxes, which is a huge benefit considering the tens of thousands of EVs that Ford sells yearly. Full autonomy is something that all automakers have been striving for years. Ford and Volkswagen invested in autonomous driving technologies via Argo AI in 2017, and in 2020, the corporation has increased its investment. However, Ford feels that completely autonomous driving, also known as Level 4, would be a significant advancement. However, this technology might take years before it's fully developed and marketable. As a result, the business has opted to concentrate on lower degrees of autonomy, levels 2 and 3 for the time being, and has taken charge on its Argo AI investment. Although this is a step back, it is reasonable in the sense that the corporation took a realistic approach to the investment and opted not to pour further money into something that it believes is not performing as expected. Ford stock is extremely appealing at a price-to-earnings ratio of only 5.7. The stock may not trade at the same multiples as some of its pure-play EV rivals, but it seems to be well-positioned to climb gradually as it ramps up EV deliveries. In addition, 2022 revenue ballooned to a staggering 15.83% to $150.1 billion compared to $136 billion for 2021, while gross profit margin also increased by a similar 15.88%. However, Ford's total assets have been slowly dwindling since 2020, which may indicate that Ford has been liquidating their asset holdings for operating and logistical purposes. It's overall difficult to argue against Ford's cutbacks, especially when the corporation has committed to billions of dollars to its EV revolution in an increasingly competitive market. Ford must maintain price competitiveness while fully utilizing the new tax credit laws to bolster their cash flow. Overall, Ford stock is appealing due to its affordable valuation, great brand, emphasis on EVs, and possible gains from the Inflation Reduction Act. If you're seeking to add an auto company to your portfolio in 2023, Ford is at the top of the list of companies to consider. Overall, we give Ford a buy rating. A series of tech crackdowns has decimated the ranks of Chinese tech companies, while Biden has tightened the distribution of US tech to Chinese firms due to the fear of leaking their technology. Find out in this video whether Chinese e-commerce giant Alibaba has what it takes to weather the incoming storm. Thank you for watching, and please like and subscribe for more videos.